Hi friends, how are you? This is Dr. A B JENA, Senior Assistant Professor, PG Department of Business Management, Fakirmon University, Basavyar, Balasore, Odisha. Once again, I am welcoming to all of you to today's discussion. So, I am hopeful that by blessings of the God, you are doing well. And today's discussion is very vital, not only from the exemption point of view, also from the UGC lectures, UGC, NET, JRF, as well as lectureship point of view, and on the demand of my dear student friends, and they have demanded that sir, please you go for some MCQ questions, and these MCQ questions will be very helpful for our academic as well as the competitive examination. So dear friends, this discussion will be very helpful to the 12th standard students as well as UG, PG students so far as the commerce, management, payment subjects are concerned. Okay, so dear friends, without delay, we will start our discussions. Dear friends, we will discuss the 25 MCQ on business finance or from financial management. Okay, so first MCQ is equity shareholders. Equity shareholders are called as. Okay, so there are four options. Okay, guess, dear friends, you guess. So first one is owners of the company, second B partners of the company, C executives of the company, D guardian of the company. So the right answer will be the owners of the company. So equity shareholders are known as the owners of the company. Okay, so dear friends, come to the second one question. Debentures represent the. So there are four options. Okay, first one is fixed capital of the company, second one is permanent capital of the company, the C fluctuating capital of the company, and D loan capital of the company. So dear friends, you just guess, the right answer will be in this MCQ. So loan capital of the company. So debentures represent the loan capital of the company. Okay. Now we will move to the number 3 MCQ. So number 3 MCQ, the funds required for purchasing the current assets are the example of. Just dear friends, you guess what will be the right answer. A fixed capital requirement, second one plowing back of profit, C working capital requirements, D lease financing. So the right answer will be the funds required for purchasing the current assets are example of working capital requirement. So C will be the, or C is the right answer. Come to the fourth MCQ, the term redeemable used for. Again I am repeating the term redeemable used for. So there are four options. A preference shares, B commercial paper, C equity shares, D that is public deposit. So the term redeemable used the preference shares. As we know, on the basis of redemption, preference share is divided in two parts: redeemable preference shares and irredeemable preference shares. So A is the right answer. Yes, dear friends. Now we will go question number 5. So question number 5: funds raised through loans or borrowings are known as A borrowed funds, B owner's equity, C share capital, D none of these. So dear friends, so right answer will be A. Funds raised through the loans and borrowings are known as, that is the borrowing funds. So A is the right answer. Okay, dear friends, 6 number MCQ, in case of net operating approach, net operating income approach, the cost of equity is A constant, B fixed, C increasing, D decreasing. So A is the right answer. So in the case of net income approach, the cost of equity is constant. So A is the right answer. Then 7 number MCQ, which one of the following is not the pattern of the capital structure? A. Equity shares and preference shares. B. Equity shares and short-term borrowings. C. Equity shares only. D. Equity shares, preference shares and the debentures. So right answer will be again I am repeating that which one of the following is not the pattern of a capital structure. So right answer will be right answer is B. Equity shares and short-term borrowings is not the pattern of the capital structure. So dear friends, I have already posted one video on capital structure. Kindly you go through and you will get more and more understanding and idea. Okay, now we will move towards 8 number MCQ. The main objectives of the business enterprise is main objective of business enterprise is A. Maximization of sales. B. Maximization of owner's wealth. C. Maximization of profit. D. Both A and B. So just dear friends, you just guess what will be the right answer. So right answer will be or is the maximization of owner's wealth. So main objectives of business organization or a firm is to maximize the owner's equity or owner's wealth. So B is the right answer. Okay, dear friends, now we'll go the MCQ 9. MCQ 9, the job of a finance manager. So the job of a financial manager, the job of a finance manager is to confine, first one is raising the funds. B is the management of cash. C, raising the funds and their effective utilization of funds, and D, none of these. So dear friends, the job of finance manager is to confined to raising the funds and their effective utilization of funds. So C is the right answer for this MCQ. Now we'll move MCQ 10. The financial decision. Financial decision involves what? A. Investment, financing and dividend decisions. B. Investment, financing and sales decisions. C. Investment, financing and cash decisions. D. Option both A and B. But A. Investment decision, financing decision, dividend decisions are the financial decisions. So A is the right answer of this MCQ. Okay, dear friends. Now we'll move the number 11th MCQ. Profit maximization ignores what? First one is the time value of the money. B. Risk factor. C. Accounting concept. D. Both A and C. So dear friends, just you guess. So profit maximization ignores what? The time value of money. So profit maximization ignores the time value of the money. So frequently you may get these questions in your, that is in a competitive examination as well as your that is in a semester examination as well as in a lectureship and UGC NET and JRF exam. Okay, so 12th one MCQ is very vital. Who is regarded as the financial management or the father of financial management? A. That is Ronald Fisher. B. Eugene Farmer. C. Adam Smith. D. Alexander Hamilton. So for your kind information, dear friends, I have already posted one video, the fathers of different subjects. These subjects are related to the commerce management and PML. So I will have the request, kindly you see. So the father of financial management is known as Eugene Farmer. Okay, so B is the right answer. Okay, now we'll move the 13 number MCQ. 13 number MCQ. The investment decision involves what? A. Investment in fixed assets. Investment in current assets. C. Investment in fixed and current assets. D. Investment in government security. Okay, so dear friends, the right answer will be C. The right answer will be C. Investment decision involves that investment into fixed and current assets. Okay, So now we will move to the 14 number MCQ. Which one of the following is related to planning, organizing, directing and controlling the financial activities? So option A financial decision, B capital structure, C investment decision, and last one the option D is that is the financial management. So the financial management is the or D is the right option of this MCQ. Again I am repeating, which one of the following is related to the planning, organizing, directing, controlling of financial activities of a concern or business organization. The financial management will take care. Okay, dear friends, we will move to the 15th number MCQ. So 15 number MCQ, which of the following affects the dividend decisions of a company? Which of the following affects the dividend decisions of a company? So option A earnings, B cash flow position, C taxation policy, D all the above. So D is the right answer. So the earnings also affect, cash flow position will also affect, then taxation policy will also affect the dividend decisions. Okay, dear friends, I have already posted one video what is the meaning of dividend and what are the different types of dividend. So kindly you go the posted video, you will know more and more. Okay, come to the 16 number MCQ. Risk management is one of the important job for whom? Risk management is one of the important job for whom? A client, B investor, C production team, D the project manager. So project manager, I mean the option D is the right answer for this MCQ. So risk management is one of the important job for a project. Okay, the right answer is option is D. Yes. Then we'll go into 17 number of MCQ. 17 number of MCQ. Okay, the primary goal of financial management. The primary goal of the financial management is option A. Maximize the return. Maximize the return. Then minimize the risk. Then C. Maximize the wealth owners. Last option, that is to maximize the profit. So the right answer will be C option. Right option is C. So primary goal of financial management to maximize the owners of the wealth. So C is the right option. Then 18 company's cost of capital. Company's cost of capital is option A average cost of equity shares and debenture. Option B average cost of equity and preference shares. Average cost of equity and preference shares. Then average cost of shares and all sources of long-term funds. Last option is average cost of short-term funds. So the right option is C. So cost of company's cost of capital is the average cost of shares and all sources of long-term funds. It's the right option of for the company's cost of capital. Okay, dear friends, and now the important questions will move. The beta measures the what? Option A investment risk rate, financial risk, C market risk, D market and financial risk. Okay, so dear friends, so beta measures what is this? The option is C. Beta measures the market risk. So dear friends, I have already posted one video on risks, different types of risks, and what is the basic difference between the systematic risks and unsystematic risks. Okay, kindly you go through. Okay, then the 20th question is security is known as which security or dash security is known as a variable income security. Okay, option A debentures, B preference, C equity shares, D public deposits. Okay, dear friends, you just guess, and the right option is dash security, equity shares. Equity shares are known as the variable income security. I mean, if a particular year company has more profit, then the equity shareholders will get more return. Okay, equity shareholders will get more return if in particular year, okay, there is no profit. So in this year or particular that year, the equity shareholder will sacrifice their, okay, the income. So equity shares are known as the variable income security, because so they will not get what the fixed rate of a dividend. So that's why, okay, so dividend payment to the equity shareholders are variable, and it depends upon the earning capacity or profit of the company. Okay, then uh, uh, 21 MCQ. What is 21? Which one is the most important and a common form of a dividend? Again I am repeating, which one is the most important and common form of dividend? Option A, stock dividend. Option B, the cash dividend. Option C, the bond dividend. And D, the property dividend. So right answer or right option is that is A, stock dividend. So stock dividend is the most important and a common form of a dividend to the shareholders, equity shareholders. Okay, so next one MCQ, dash refers to make of the firm's capitalization. Again I am repeating, so dash refers to make of the firm's capitalization. Option A है capital structure, option B है capital budgeting, C है equity shares, D है dividend policy. But the right option is A. Right option is A. Capital structure refers to make of the firm's capitalization. Okay, dear friends, now we will go into the 23 number of MCQ. Dash of debt capital. Dash is the debt capital is a factor in favor of using more debt capital. Option, there are 4 options. Option A है tax advantages. Okay, B है equity knobs. C है leverage effect. D है security of assets. And the right option is A. Right option is A. So tax advantages of debt capital is a factor in favor of using more capital. So the tax advantages is the right option for this MCQ. Then 24 MCQ, 24 number of MCQ, when capital market is booming, very positive, favorable. Okay, when capital market is booming or prospering, okay, firms takes market route to, or business organization, okay, can take the market route to. Okay, there are 4 options. First one is that is the raise capital, then decrease capital, stop growing, then stagnate. So right option is for this MCQ, it's a raising capital. So when the market is booming, so company or corporate business organization, okay, can take or raise more capital. Okay, so last MCQ of our discussion is risk and return. Frequently you may get this question. So risk return trade off implies what is this? Option A, increasing the portfolio of the firm through increased production. Then option B, not taking any loans which increases the risk. C, not granting credit to risk customers. D, taking this decision in such a way which optimize the balance between risk and return. Okay, so dear friends, so D is the right option, right answer for this MCQ. Okay, risk and return trade-off implies taking decisions in such a way that which optimize the balance between, what is this balance between risk and return. So these are all about today's discussion. So dear friends, I am hopeful that you have enjoyed in this video. If you like this video, kindly you share and subscribe and forward it among your friends. So once again, thanks a lot to all of you.